Hey everyone, Brian Bailon here, your local Phoenix realtor. And today I have another video for you about the housing market mid-June 2020 housing update and real estate market update. And there's a lot to talk about here, tons of things to talk about. And it seems like the market is just changing every single day, basically. And there are a couple of factors to really pay attention to as you're navigating the real estate market today. So before we get into it, please subscribe to the channel and hit the notification bell for updates. I'm trying to post more videos here. Things have been a little busy, but I want to get back to posting more frequently. So thank you to those that are joining me today and are able to get the lowdown on what's going on in the Phoenix real estate market. Okay, so we're going to get into it. So basically the supply of homes is down, like a lot down, like record low. Basically making it difficult for those looking to buy a house to actually get a house. There was a small bump in supply back in March or so because of the short-term rentals hitting the market. Bookings disappeared for Airbnbs. So there was, the crisis that happened, the COVID-19 stay-at-home orders. People weren't traveling, so they decided to, put their houses on the market. So these really nice, upgraded Airbnb, beautiful properties were being put on the market, and they were selling. And just not as fast as it was, throughout recent history, but they were selling. So things are a bit more normal in the price points in $600,000 and above, just partly because there's less buyers in that area and that price point, but also less investors and iBuyers operate. If you don't know what iBuyers are, they're basically those companies that offer cash on your home, but they are the more official ones like Open Door, OfferPad, things like that, or more well-known, should I say. So on the note of new record lows for inventory, so the city of Maricopa, just to give you guys an idea, city of Maricopa has 93 active listings compared with the average of 428 in the past 12 years. Also has 289 listings under contract. Now that's pretty crazy. Think about. So Maricopa has 93 active listings and 289 listings under contract. So the contract ratio to active listing ratio there is really lopsided. I mean, basically, if a house is eligible to be sold and it's decently desirable, it's most likely going to sell. And that's not the only place. The city of Maricopa is not the only place that's experiencing that. Phoenix has, let's say, 1,285 active listings with a historical average of 4,573 active listings. Gilbert, 255 active listings currently, historical 1,137. Surprise, 305 active listings with a 929 average. And Levine, look at this one, 19 active with 147 historical. That's crazy to think about. A very lopsided market, heavy buyer demand, low supply. Homeowners are holding onto their homes. They're remodeling, they're refinancing. They're just not motivated to upgrade or move unless they have to. I've had conversations with the general public. Those that are interested in upgrading their homes are the ones that have to, right? They're adding family, or they have family moving in, like their parents. They need more space. They have a 3-bedroom. They need a 4 or 5. So those are most of the reasons, or they're relocating, right? They have to go to a different part of town. They need to upgrade, might as well. But for the most part, sellers have very little motivation to sell and buy right now, just by choice. Just one of the big factors is if they sell their home, they're going to be buying at a high price. They may sell at a high price, but they're going to be buying at a high price. So usually they're going to be buying lesser of a home. So that's kind of the story with that. The exceptions are cities that are outside the center. So, you have your 17 major cities within the Phoenix area, the greater Phoenix area, Maricopa County. And then you have your outskirts cities like Morristown, Wickenburg, Eloy, things like that. Those cities are Casa Grande. Even Casa Grande's sort of doing a little bit better and a little bit more aggressive than, say, Morristown, Wickenburg, or Eloy. But those are not as hot market areas. So, and understandably so. They're more, smaller towns, less job opportunities, less population, less people moving in. So Phoenix, the greater Phoenix area is number one for most move-ins last year and that trend's continuing this year, minus the COVID-19 really halting people's plans, but still one of the fastest growing cities in the United States. One thing to look at, especially right now, is lending. And going into lending and the mortgage industry is really key right now, because we had moratoriums on forbearance and rent deferment. Rent deferment is important right now because if someone's deferring their rent, that means the landlord isn't getting paid. And if the landlord's not getting paid, they're going to go out of pocket on paying their mortgages. And that usually is a second, third, fourth, or fifth mortgage or more. And if that's a problem, if long term they have either a bigger portfolio or they're counting on that renter, that tenant, to pay their mortgage. So it is definitely putting a strain on the market on the investor side for landlords and also for the mortgage company. So here's some stats to go into it. So April 2020 saw the largest ever single month jump in delinquency. So that's ever in April 2020. So up over 90%. And that's largely due to borrowers requesting forbearance. Because the CARES Act, they created a provision to have up to 120 days of forbearance, which I believe ends at the end of July, that people that have lost jobs or have been affected by COVID-19. So if you've lost your job due to that reason, your place of business or your employer had shut down due to COVID-19 or cases, or if you have yourself been affected and are currently ill or have been ill, those are some reasons why you can get a legitimate forbearance under the CARES Act. So that's what the population we're talking about here. So 1.6 million, this is national, 1.6 million home loans became past due during April 2020. Now, that's fairly significant considering there's about 1 million rooftops, just over 1 million rooftops here in Arizona, or I'm sorry, in Maricopa County. So consider that if you just putting in perspective, 1.6 times the amount of homes available in Maricopa County are in delinquent status or past due, national. So that's a large section large percentage of the national inventory and homeowners pool. So there's cause for concern, right? And a lot of that can be COVID, it could be the stay-at-home orders, it could be unemployment. There's a lot of reasons for that, but that number is important just because of the next following things I'm going to talk about here. So foreclosure moratoriums brought foreclosure starts. So basically, the process of foreclosure starting to a new low of 7,400, and that's down 80% from April 2019. So it has had a significant dent on the foreclosure process, and banks are being deferred from initiating the foreclosure process and giving these provisions due to the federal law, the CARES Act. So what's important here is this next stat is during April 2020, Arizona home loans that are non-current, whether in delinquent or already in foreclosure, jumped 91% to 5.2% of all loans compared with April 2019. So 5.2% of all home loans in Arizona are now in delinquent status, non-current. That's a pretty significant jump, 91% jump. Here's why that is important. What we want to do is you want to watch the notice of default numbers during this time. Right now we're in forbearance, so we have a couple months for that to play out. We don't know if that's going to be extended, considering the circumstances. We'll have to find out maybe in July, mid-July, or as more time goes on. But that's important because once you start to see those numbers skyrocket, usually within the 3 to 4 months from there, you're going to see the pre-foreclosure process starting. And then they will publicly declare that a certain amount of homes in our market, let's talk about Phoenix, will be on the notice of default list. And if there's a sudden jump, right, if that plays out, let's say in the next 6 months after that 4 months of those notice of defaults coming on market, those homes are going to be most likely put on market because for the most part, if you've purchased a house a year or prior from 2009 or 10 till 2019, you have equity in your home. So it's not like there's going to be a massive, like people are going to be underwater on their homes trying to get rid of it and do short sales, unless something really catastrophic happens with house prices, which in Arizona we don't see that happening. There could be evidence, though, if there is a large spike in foreclosures, that it shifts to an aggressive buyer's market, because right now we're in a very record seller's market, very aggressive seller's market, where prices are continuing to go up despite everything going on. If we see a large jump, let's say 20, 30, or 40,000 homes going on market in Phoenix under foreclosure or pre-foreclosure or short sale status, that could actually topple over to a buyer's market. And if that happens, then we could see prices go down. So that's one scenario I can think of. But yeah, things to really pay attention to is that notice default number, and just to see how it unfolds. And that scenario I went through is just to give you an idea of how that could play out. Lenders, from what I hear, I had actually a friend of mine. They lost their job yesterday, and we're talking to the mortgage company, and they said they would put any payments that were under forbearance that weren't paid due to the CARES Act and COVID-19, being affected by COVID-19, they put it in the back of the loan. So whether that means that it increases their interest, which most likely it will, because longer terms, you're going from 360 months to potentially 364 months. So you'll be charged more interest, which could cost you thousands of dollars later on in the lifetime of the loan. But most likely, I would recommend personally getting as current as possible with that if you could pay that up front, and not wait 30 years. But that's how they're solving some of that problem, so there's less financial burden instead of paying up front right away or once the CARES Act is lifted. But still, it doesn't change the fact that if someone's unemployed and they've not been able to get a job, then they're not able really to pay for their mortgages. Now, also consider that unemployment right now, there are some that are, making 800 or 850, but that's 800 to 850 a week. It's about, 2,800 to 3,300, depending if you have dependents and that kind of situation. But that's temporary, right? Because the average really is around 250 to 300 a week for unemployment. They have also been talking about considering bringing it back down to 250 to 300 because the incentive to work is not there. And people are just on an unemployment, not motivated to get their jobs or to actively look for jobs because they're making more money than if they would be then staying at home, right, or not being employed or being under unemployment status. So with that said, that's something to watch, right? If the unemployment, the benefits, right? Unemployment benefits go back down to 250 to 300. Now you could see people needing to flood the workplace and start getting jobs again, and unemployment numbers would go down. But then the question is, will the job market be fast enough to replenish to be able to provide those jobs? Right now, another thing to really think about as COVID cases are increasing in Arizona, we now become the hotbed, is how much of the businesses will actually be expanding during this time. As we've seen, as I've observed, there are big businesses and even small businesses and restaurants that are closing due to COVID cases, and they're closing for a couple of days to 14 days. And as the ratio of people are increasing that have COVID, more than likely somebody within the next month will come into your restaurant that has COVID. It's a staggering statistic, actually. It's last week, as of June 13th, Arizona had 9,007 cases within a week, and that was a 45% increase. And that brings basically the ratio at that time in June 13th to 1 in 211 people infected. So if you can imagine, in a single day, let's say we're out and about and, you go to the mall, or then you're going to a restaurant, you're going into, random places, you're going to see 211 people in a given day, right? So at least see them, right? It doesn't mean you're within 6 feet, or whatever, but you will, you can be in contact with that many people. And then the cases are going up every single day, right? And we're in the thousands on a daily basis. So quick note, stay safe out there. If you can avoid, being out and about in public areas, then do so. Next best is to, wear your face masks and, practice social distancing, 6 feet. Ideally, I practice more than that. Sometimes you can't, right? Sometimes it's, difficult as you're in public places, it's just how it is. I mean, I was even running around my neighborhood you're going to be in contact with people. I walked by somebody who was walking, I was running this morning, and they walked by and they just, the same side of the street. So we could cross paths less than 6 feet. Not much you can do, right? But you do the best you can. So just a quick thought there. So, so what do you watch, right? So with COVID cases, and that's still a very major factor right now. It is affecting us and our marketplace. Things to watch out for are stay-at-home orders, potential stay-at-home orders again. I know they're really resisting that. They don't want to open up or close down the economy again, because that's really, the alternative is just to increase government spending, which in reality we can't afford. So keep the economy running. Fundamentally, it's okay. There's just a pandemic, so having to adjust for that is very challenging. But if they do stay-at-home orders again and they make it longer, that's going to affect, unemployment will skyrocket again. And you can see the patterns that happened in March and April happen again. And the longer that it is, the worse that it will be. So that's something to watch for. Watch the number of COVID cases if they continue to skyrocket. That'll put more pressure on a potential stay-at-home order again. Also watch the market, because that's basically a stock market, and because it's an indicator of general consumer sentiment. And if you see a major pullback, right, 20% is the figure. If there's 20% pullback in the stock market, that indicates a bull market, and general investor concern or fear about the future. And even right now, because you can kind of see it even in the regular everyday life, people aren't really afraid. They're just out there, and they're going out and doing their normal things. So you can going to the malls, going to restaurants, right, and just kind of living life as normal. You're seeing a significantly less investor fear or concern about the market, and consumption is up. And when consumption is up, then the market continues to expand and grow. And that's what we're, in a sense, seeing right now. And it's being reflected in the housing market, it's being reflected in unemployment in other places. So what to expect, right? And I've got to finish up here. So if you're a buyer right now, finding a home is a great challenge. And I have a couple buyers right now that are on the sidelines just waiting for their house to come up. They want specific homes, and the price points are on $500,000 and under, and it's very tough right now to get a resale home. So you may have to put multiple offers on resale homes, and the further out from the center of town, the better. Really, if you're, like I said earlier, if you're in Morristown, Wickenburg, Eloy, that's going to be better. But usually if you're looking at Maricopa County, even if you're in Buckeye, if you're in Avondale, Levine, if you're in Queen Creek, if you're looking in North Phoenix, Anthem, it's all the same. It's very, very hot market in Maricopa County as a whole. So you can expect to be waiting for a house, putting multiple offers on the house, submitting full price or above ask offers, and competing with above ask or full price offers with no concessions. So it's very difficult right now. And the one big draw for buyers right now is interest rates. Interest rates are excellent for buyers. And there are some that are getting qualified for 2.75, which is amazing interest rates. And it's just such a good market for getting a loan right now. And originating a loan, it's very difficult to actually find a resale home. So a lot of where my clients are ending up going is they go to new builds, and they buy new construction because the inventory is there. If it's available, it's available. There's really no bidding war there, because they'll sell you the lot when it sells. If it's not available, it's not available. And there's no haggling, right? There's no competition where you're having to offer more on a property or a piece of land because of competing offers. So this is a really good point, and this is definitely something I want to go over in another video, but this is not a 2005 housing bubble. We have normal appreciation. We've been having normal to above average appreciation. It's been very healthy, right? It's not 20% gains in a year. We've seen 10 or 11, but not 20. And 20 is really, and back then in 2005, the reasons why we were seeing that is because of the fraudulent loans, and these loans that were subprime. NINA is what they call it, no income, no asset loans. They're submitting these loans with five subprime, low credit scores, stated income, stated asset, or no income, no asset loans, and they were buying houses in $500,000 or more and flipping it. And once the stock market crashed, right, and the mortgages went belly up, then all they did was just file foreclosure, file bankruptcy, and they were clean from it. But this is not that case. This was normal, healthy appreciation, and there are hardly any fraudulent loans now because Fannie Mae and Freddie Mac, lenders have to adhere to those guidelines. Sellers, real quick, if you put your house on the market in 600,000 and below, this is a fantastic time to sell. And the market's so hot here that if you have a decent house that's pretty competitive in terms of condition, in terms of age, in terms of location, it's pretty much going to sell very quickly with multiple offers. So if you're looking to ride that out and kind of get in a sense sell at the peak of a market, this is it. I mean, we can already see that we're during turbulent times. So anything could change at a drop of a hat, like the foreclosures, and if it flips to a buyer's market, then we won't be seeing as aggressive as offers. Your house will sit longer, etc. The other thing too is that either going above ask, and they're these houses that are listed for sale going above ask, and they are also appraising, which is actually quite incredible to me. That appraisers are actually letting these above ask offers go, right? And if that's the case, then that's another reason why house prices have been allowed to go up, is because appraisers are approving these increases and going along with it. So they're appraising. So if you get multiple offers, you may be concerned. There's still a chance it wouldn't appraise, but still something to consider. You still need to make your home show ready and competitive. And it's not like you can put anything on the market that's going to sell. But if it's sold for the right price, right, if it comes correctly, then yes, you can do that. Still need upgrades. Upgrades are in. If you have kitchen, bathrooms, flooring, fresh coat of paint. Exterior looks pretty good. Windows are okay. All that kind of stuff. It's pretty much going to sell for a pretty good price, and you'll get the multiple offer situation. So hopefully this has been helpful for you. Thank you so much for joining. If you haven't already, please like, comment about any questions you have, but also subscribe to the channel for any updates. Anyway, guys, thank you so much for joining. Hope you have a great night. And first of all, I forgot to give you guys shout outs. Joaquin, thanks so much, man. Thanks for watching. 85031, is that 85031 zip code? Not good. Prices are very low there. I heard crime is high. Is that correct? Okay, so real quick, 85031. I'm gonna check for you and just get an idea of where this is. Okay, yeah. So so there's actually a website for crime. You can look up crime statistics, and what it does is it shows you what happened, like any crime cases that were committed in a specific area, and it gives you the whole map. I'll put it in the comments. Actually, it's called LexisNexis, and that'll show you the crime. Prices are low in that area, and I'll just give you a little background on that. So yeah, you'll see prices in the low 200s to 250s. Pretty good options there in terms of homes. If location is important to you, it is a lower income area. So I can't say too much about, like my opinion about the area in a sense. There are certain fair housing restrictions that I have, but just, consider the crime statistics that I'll put there, as well as your, the low income aspect of it. And then that can tell you a story. Another thing I recommend too is, you can drive around there and get an idea. If you're from out of state, then you could Google Maps it. In fact, what I could actually do, if you're really interested, is I could film a short tour for you, like a virtual tour of that. I do have actually virtual tours on my channel as well, so you can check out. If that's something you're interested, just feel free to comment. All right, so thanks for your comment and you guys watching and tuning in. Hopefully this has been helpful. I want to do these more often, so I'm planning to. And we will catch you guys later. I hope you have a good one.